What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you as always, I am the people's champ of Wall Street, the bearded boy wonder, Dave Bartosiak. And today, my friends, we are talking all about Alibaba, ticker BABA. We've got a few things to talk about today with regards to this. And we're going to check in a little bit, I suppose, with, we could take a little peek at AMD, and see some other things. So the crew's coming in here. Kurt, how you doing? Bruno, welcome. Trevor, what's up, man? Mr. Wallace, how are you, sir? Greg, what's up? How are you, Greg? And Dr. Paul, of course. Hey, Tracy, how you doing? Folks are kind of trickling in here. I'm just gonna go ahead and get started because there's a lot. I got a lot to do today. I really do. It's always something, man. Today, good news is, well, good news. I guess I shouldn't say good news because she'll be mad if you hear this. But the girlfriend's out of town. Dropped her off. She's up in New York for work, so I'm unsupervised, which is good. Not because I'm going to do anything stupid, but because I get a lot of work done when I'm left by myself. So some people don't like being by themselves. I love being by myself because I get all sorts of stuff done, and that's what I'm planning on doing today. All sorts of stuff. So that should be fun. All right. Let's go ahead and take a look at this. So, first, foremost, like we always do, let's kick things off with the price consensus and EPS surprise chart here on Zax.com. As always, the black line corresponds to the right y-axis. The green arrows are earnings beats. The red arrows, there are a couple of them, a couple of disappointments here for Alibaba. The multicolored lines represent the evolution of our Zax consensus estimates over time and coincide with this left y-axis. So what do we have overall? Lots of bullishness. Very nice trend. You know, I remember the Alibaba IPO, and there was a lot of skepticism around the that. Remember, Alibaba was public before and didn't really work out. And then they faded away, and then they came back really stronger than ever. And a lot of the concern was, oh, the books are cooked. All these numbers are fake. Blah, 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 blah. I understand the fake news argument, right? But I think it gets thrown around a little too much nowadays, especially. And, you know, we need to get down to the root of these things. So let's not be so cynical to believe that a publicly traded company is constantly juicing all of their numbers 100% of the time, so much that they're able to trick everyone with their due diligence over years and years and years and years and years. Unless it's some sort of massive fraudulent undertaking. And then you're throwing around like Enron type stuff. So I think Enron is certainly the outlier and not the norm. So when I'm looking at a company like Alibaba, under a lot of scrutiny, I tend to believe what I'm seeing, okay? So I guess that's the first thing. And so what am I seeing? Lots and lots of growth. So you got year-over-year growth, and then growth accelerating here, which is fantastic. I mean, this is exactly the sort of trend that you want to see in an earnings chart. So a little different from a lot of the bullishness that's happened here in the U.S. because I don't know that Alibaba is going to be benefiting from our tax cuts here, right? I don't think so. Maybe indirectly by U.S. consumer being stronger and us buying more stuff from China, but we're not exactly buying it on Alibaba, right? So This is more of a Chinese play, emerging market, so to speak, sort of play. And you're betting on Jack Ma. Make no mistake, here you're betting on the jockey, not necessarily the horse. So we're talking Jack Ma. Dean, Brian, how are you two doing today? All right, so overall, what am I getting from this? Lots and lots. Hey, Jeff, how you doing? Lots of bullish behavior, looking good. Of course, this is a stock that's gone from, 90 bucks all the way up over 200. So that's obviously something you got to think about. But look, when the stock was trading down at $90, look at where those earnings expectations were. Between $3 and $4, okay? Now for this year, you're over $5, and next year's number is close to $7. So lots and lots of bullish movement in those earnings estimates, which is helping to justify this move. Now, should it have tripled since the beginning of 2017 nearly? Okay, doubled. More than doubled, nearly tripled. Should we? Well, EPS has gone up a little bit, so I don't know, maybe. Market says we should. Let's look at the detailed estimates page here. We have them as the Zacks rank number 3. Hold right now. Stock's up a little bit. Everything's up a little bit today. Top 38% of our Zacks industry rank. Here we have this industry being the internet and commerce and that kind of thing. They're going to report before the market opens on February 1st. So again, this is another one of those day of sort of plays. Scroll down to these revenue numbers. I mean, this is just staggering. 58.16% year-over-year revenue growth. Next quarter looks like 58. Current year's 58. Next year it's going to slow to 38. That's huge. Huge growth numbers. When we dig into our fundamental charts, we're going to take a look at what does that mean for their price to sales ratio. Over to earnings, hey, they're making money, folks. 26% earnings growth year over year here for this quarter. Next quarter looks like 68. This year is going to round out at 52. Next year, another 30% growth. Now, all these numbers are pretty positive. Why is this a hold? Here's where it is. Over the last week, you do have some bearishness showing up here. Now, it takes some chutzpah to come out here and drop your earnings estimate right before an earnings report, right? Of course, not as much chutzpah as it takes to increase those numbers that we've seen also. So, not a lot of agreement here, but let's see what the overall impact has been to our consensus. And the consensus estimates has dropped down from $1.70 to $1.65 for the current quarter. Next quarter's gone from 113 over to 106. Current year number's gone from 523 to 519. Next year's number went from 671 to 673, and then 680, 677. So kind of started to tick up a little bit, looking pretty decent. Everything overall is relatively bullish here. Then you see the most recent estimate coming in at $1.69 versus that $1.65. Surprises, couple in a row, a quarter and then 24 cents, coming off of a 2 cent dip here the previous quarter. The Floridian rubbing off on the beard, bro, huh? Because I'm playing a little CCR, you gotta switch it up, man. You know, you gotta switch it up. I listen to all sorts of craziness, man. All sorts of craziness. All right, now I'm gonna look at just continue. Just what is happening here? Go back. Don't do this to me. Don't do this to me, man. Let me tell you guys. All day today, all this morning, I've had nothing but trouble with everything on Earth. I'm telling you, everything I've had trouble with. I use a Google spreadsheet to take care of some business, and the spreadsheet just did not want to work for me today. I had had to do all sorts of madness to get things back rolling today. And still, things just aren't really working out for me today. It's one of those days. Just one of those days. All right, gonna make this a little thicker. You know I like the 50-day. 50 day is my choice. My of choice. The dog's okay. That's right. The dog is good. He's chilling around here somewhere. Oh, he's right next to me. So I got this nice little setup where he's got like an ottoman next to me, but he's so small he needs like a step up in between. So I have my computer bag on top of a shoebox, and it's super comfy. So he like hangs out there all day. So he likes it. Look at this move. I mean, this is spectacular. Leapfrogging the 50-day to start the year, and then barely looking back. You do have this nice bottom that got put in. A little bit of a range-bound trade that happened. A wedge developed, and now we've broken out to the other side of that. So I think we have a little bit of a floor here. We're going to call this 192.50, right? What's this high? This is 191.75, 192.49, 192.40. So we're going to call it 192.50. I actually didn't name the dog at all. The girlfriend had him before I got here. That's why he's got a little attitude with me sometimes. If I ever get in a fight with a girl, the dog like ignores me. It's absurd. That's I guess one of the negatives of being a stepdad. So all the way down at 192.50 is really where support is. 50 days all the way down here to 183.15. Of course, we could draw a local fib here. This will give us a decent. I mean, you could go here to here. I'd rather do this sort of swing low to here. And look at how yesterday's range came down to test this 196 level. And again, we've got this sort of firm floor here. So I would say 196, and then definitely this 192.50 level. Those are levels to watch. To the downside, the upside would be extensions of this far and beyond from there. All right, so let's get some fundamentals here. Yeah, I kind of do. I mean, I kind of get it, Kurt. I'm a product. So I was a little turd back in the day. A little bit. Not too bad, though. That was pretty good. So here's the consolidated surprise. I know we're going out of our normal rotation here, but that's fine. But really, the thing to hammer home is not a lot of movement. 5%, I guess, is decent. Last time we had anything dramatic was June of 2016. And then going back from there, 4s and 7s. So early on, obviously, you're going to have more movement in these earnings reports, you know, on a stock that's recently an IPO, because the, you know, the analysts don't quite have it figured out. They don't know what to expect out of the company. So as the company matures, the dialogue gets a little better between companies and analysts, and they set more realistic expectations. That's why you see some of these huge companies, you know, come in a penny above or 2 pennies above nearly every single quarter. They do a great job of managing the expectations of those analysts. So overall, there hasn't been a lot of movement coming out of Alibaba recently. Okay, not a lot. Last time was June 2016. Let's look at some valuations here. Forward 12-month earnings. S&P's down at 19 times. Alibaba's all the way at 36.25. So a little expensive. I know we love to call it the Amazon of China. Little different plan here, though. You know, Amazon just doesn't care about earnings. I mean, why should they? They've got fantastic ROI, right? who better than Jeff Bezos to figure out where you should invest some money? So Amazon's not so concerned with what's happening from a PE basis. That's something that is price to sales. So let's pull that up. And this is good to know because aren't we covering this tomorrow anyway? Yes, of course we are. So let's look at the price. Oh, not price to book, sorry. I wanted to do price to sales. There we go. So here it should be a little bit surprising that Alibaba is 21 times sales, whereas Amazon is only 4 times sales. But what does this tell you, guys? Pretty good profit margins over there, right? Given that they're still trading at 35 times earnings. Okay? So, and we can compare this to the sub-industry, right? That's that Zacks, everything else that's in that Zacks industry rank. And, of course, it's going to be at a premium to that. And then to the market, forget about it. You know, you're down under 4 on the S&P 500, 3.59, whereas Alibaba 21.8 times sales. So pretty astonishing stuff there. Okay, let's look at bar chart. Let's go from the stacked view to the side-by-side, trading 204. So we're going to use 205. Remember, they're reporting before the bell tomorrow, so talk about snap judgment. We'll give you an idea for levels to look for tomorrow. If it dips, what you can buy it at, and all sorts of stuff. So 205 call is going to cost you $5.90. 205 puts, basically 618. So they're looking for 1208 on 205, looking for a little less than a 6% move or a $12 holler coming out of Alibaba. So what does 12 bucks look like if we're looking at the charts? Let's see the stock at basically 204. So that puts you all the way up to 216. And then, is it a surprise, my friends, that that brings us right about to that 192 area? And now we know that that 192.50 was pretty good. Resistance for a while becomes support. So perhaps looking to sell some puts out of the money under this 192. I don't know how much juice is in them, though. So let's look at this. Don't look at the front week. At least give yourself a couple of weeks. I would argue even more than this. Let's change from the side-by-side to the stack view. See what we got going on here. So what I say, those 192s, let's see how much those are. Hey, this isn't too bad. 192.50 put right now, trading 305 to 315. So here's something, folks. If you're bullish on the long-term prospects of Alibaba, you've been wanting to pick up some Alibaba, but you've been a little hesitant. You think it's a little bit overpriced here. You're worried about this earnings report. Just selling this 192.50 put outright, not a terrible idea, okay? Because if you're looking at a stock that's all the way up here at 204, you're saying to yourself, you know, if it comes down to that support level, I would buy it down at support there. If you just sell the 192.50, you're going to get 310, a credit of 310. If Alibaba stays at or above that 192.50 level, guess what happens? You're just going to pocket that 310. You don't have to do anything. If Alibaba comes below 192.50, the shares are going to be put to you at 192.50. But what did you already do? You already got yourself a little bit of a discount, right? You're going to get put at 192.50, but remember, You also get that 310 in credit. So really your cost basis will be all the way down at 189.40, which when you're looking at it today ahead of earnings, asking yourself, should I buy 100 shares of Alibaba? If you just did it this way, that's one way to get in at a much cheaper price, still participate in the upside. How do you really get burned on that? Well, you get burned if Alibaba really takes a dump, right? And shares sell off considerably. But this is the risk that you're getting compensated for ahead of this earnings report. So that was just for you folks out there with ideas on how to enter kind of a more long-term sort of trade. Now, if you don't want to get stuck, meaning you don't want to get 100 shares put to you at 192.50, another option that you could do here is selling that 192.50 but buying the 190. This way, you're not on the hook for having to buy the shares because you're covered with the 190 puts. We're looking at the February 16th expiration here, assuming that bar chart loaded this up properly. You know how they like to do me sometimes and mess with me. They like to mess with me and throw me off. 192.50, we're looking 310. If you simultaneously bought that 190, you're going to give back 246 of that. Here you got a 64-cent net credit. Now the difference in the strike prices is 250 minus that 64 means by putting on a trade like this, you would have 186 at risk. You would make 64 and have 186 at risk, or 34% gain here is what you can make potentially on Alibaba. And all you would need is shares of Alibaba to stay at or above 192.50 at expiration. So this is a bull credit idea, just short the February 16th, 192.50, 190 put spread for a 64-cent net credit. Now, if you want to be more aggressive, you think Alibaba's going to break on through to these highs, and you see that the market's pricing in a move all the way to 216, what sort of debit spread could you look at? Well, you're still going to use this 205 as an anchor, but you don't necessarily want to pay $800 for this, right? And we do know that the 215 is the closest to that strike, that 216 strike, okay? So, sure, you could go long the 205, short the 215. A cheaper way to get almost the same risk versus reward in terms of what your payoff would be, just doing what I've called here many times the halvesy. So what's the halvesy? We're still going to use that 205 as an anchor. So in this case, going long, the 205 call is going to cost you $7.98. Simultaneously selling the 210, you're going to get back $5.85 of that. So the net outlay in this case is $2.13. Difference in the strike prices is $5 minus that $2.13. It's $2.87 on $2.13. You can make 134%, and all you need is shares of Alibaba to close at or above $2.10 at expiration. Now, it's $5. It's not a huge move, only about a 2.5% move, and we've seen that the market is pricing in less than a 6% move, but oftentimes Alibaba has not made a move of 5%, only 2.5%. So how often does it only go 2.5%? Let's pull this up again, just so we have this in the back of our minds while we're looking at it. 1.5%, 5%, a 2%, 5%, a 3%. So there's been once when, and this is just 2 days before and 2 days after the report, there has been a time when it's moved less than 2.5%, but it's been a while. Okay, it's only happened once, rather. It's only happened once where it didn't move 2.5%. And that was, oh, sorry, here's another one. So twice. So if you are, in fact, bullish, here's a bull debit idea for you. And I would even go, you can even go further out. let's show for the more patient sort of options traders out there. Yes, this. Well, I suppose you don't have the. We don't have a 205 here yet. Let me see if I can get a 205. No. Just go to the March 9th here. Spreads aren't too bad, 20-cent spread. Here, you're going out a little bit further, okay? So, and further in terms of time. So these options are going to be more expensive. They're going to be more expensive to buy, but that also means you're going to get more when you sell them. So look at the same move here. So with 205, 210 going out to March 9th, which also happens to be the anniversary of the market bottom and the death of Biggie Smalls. So it's stuck in my head here. 1008. No, we've got Led Zeppelin on in the background, my friend. So the 205 call is going to cost you 1008. Simultaneously selling the 210 call, you're going to get back 790 of that. So here again, 218. Difference in the strike price is $5 minus the 218. You make 282 on 218, or 130%. A little bit more patient, go out a little further. Now, since you're going out further, if you choose, you can also put a little bit more distance in those strike prices. $4 is what you're going to get. Buying the 205 is 1008, selling the 215, 608, $4. Only here the difference in the strike prices is $10. So you're going to make 150% on this. You have the potential to make 150%. But notice how okay, I got you, Kurt. Notice how you can make, you got the potential for 130 from 205 to 210, and then there's only another 20% in this next $5, right? So what I tell people, if you don't want to spend $400 going out that far, what you can do is pinch in a little bit and just buy a little further out. You're adding risk, but there you go. Okay, so that's on the bullish side of the equation. Now the bears have a pretty good case here also. Stock has just gone up so much. I don't think TradeView is going to want me to go in. I got to log in, and I didn't log in. I told you I had all sorts of issues happening today. But we could say 215 is where this market, well, it's 216 technically. But you bears could do something like this. This is the February 16th expiration. Selling the 215 call, you're going to get 395. Simultaneously buying the 217.50. Going to get 328 of that, or give 328 of that back. $67 is the net credit. Difference in the strike price, 250 minus the 67. Makes 67 on 183, or 36%, okay? So that's a bear credit. Short the Feb 16th, 215, 217.50 call spread for 67-cent net credit. Now, you Condor lovers out there will note that, hey, I could do a 215, 217. I basically do the bear credit and the bull credit, and I can cash in here, and it looks good. Yeah, and in order to do that, basically, you'd have to say that Alibaba was going to stay in between that 192 and that 215 level. And that's essentially what you're betting on if you put on a condor like that. As for me, I've got to keep my directional bias here. And I'm going to say that the trade that pays is the bull credit spread. I'm not so convinced that this stock or any of the stocks coming out this quarter at all are going to have these huge rocket moves to the upside. Only one I've seen is Netflix. And the rest of them haven't really impressed, right? They've just kind of... Although today it does look like... why does he want me to do this? I'm going to pull this off the screen. Hang on, guys. I'm going to see if I can... like log in really quickly here. Yeah, there we go. All right. That's better. It's actually a neat little free site they got going on here. So who do we want to look into? We wanted to look at AMD real quick. These guys are starting to get up a little bit. This is another one of those situations where don't pay attention, or at least don't freak out. You can pay attention, but don't freak out based on what you see in the after hours, okay? Because it's never the case. Whatever happens in after hours, ultimately they fade it. You know, there's not a lot of liquidity in the after hours, so the stocks will bounce around, and some other. The other thing that'll happen is they just simply will react in like the opposite direction that you think they would act. It's like the algos just hit the headline and they go before they even heard the call at all, right? So for AMD, it's like the market beat it up just based on the numbers there, and the numbers were great. And then all of a sudden they get on the conference call and we're talking about a third of all, you know, processing being demanded from cryptos, and then now all of a sudden here we go, you know. And the stock is starting to move, and I feel better, and I'm still expecting this thing to gap, right? And you guys, you know, have a little bit of patience. I know you don't need much patience, but you got to have a little bit. So when a stock is, you know, off in the 30 seconds following an earnings report, don't go freaking out. And then in the morning, if it's up 4%, don't say it's not moving. I mean, 4% is moving, folks. So speaking of that, chat, it's discord.gg/little-p big B WMC, and it's coming across the screen. I'll get the rest of it. Dean's got a question. What about a tighter net debit call spread but double the contract count for the same risk versus reward? Absolutely. When you see that come in, go ahead and do that. No worries. So here's the Discord chat app coming up here, and here we go. Curious thoughts on race, which is Ferrari. I think they are really making a huge push this year to get that $1 billion in profits, well, billion euros in profits. They had to shut down, you know, production of the California for the Portofino. The V12s were selling very well in Asia. I know that was a good thing. And now there's talk of, oh, we're going to make an electric car that's going to be the best in the world. Good luck, Ferrari. And we're going to make an SUV that's the fastest in the world, of course, too. These are all, I think, good things to talk about, and will boost the stock up a little bit. I think ultimately this run is nearing an end for Ferrari. That's what I think. Their electric car is not going to be better than what's already available out there. And to think that you're just going to enter the market and be an awesome electric car thing is a very Ferrari thing to say, which is pretty interesting given that Ferrari was so vehemently opposed to anything electric just a few years ago. Just like they were so opposed to an SUV, Lamborghini did it, and they go, okay, well, if Lamborghini did it, now we're going to do it. Huge difference between Ferrari and Lamborghini, though. Lamborghini borrowed that technology from VW, because that's basically the Touareg / the Cayenne, or the Cayenne that from Porsche, and then they just, changed the body on it and put a V12 in it, and there you go. So there's that. Okay. So what else do we have here? Race, expect a smaller move, think of a pop, racing thoughts. Dr. Jones, hello again. Da boom. Yeah, Ferrari, I mean, we'll see. Lamb getting into a little bit of a zone here. Wedging, starting to wedge a little bit, my friends. I would be drawing fibs from here to here, and I bet you that hits one of them. So you're starting to get on this trend line. If it breaks that, get out of the way. Here's a good thing, though. Commodity Channel Index was overbought, has come down to the oversold territory. If it peaks here and peaks its head just under that -100 and creeps up, then that would be a buy signal there. Sucampo Pharma, is that what those guys are? That's crazy. I don't really follow these guys. You know who's really good at this kind of stuff is Kevin Cook. He's all over it. So all I can do is take a look at the chart. Did they get bought out? This looks like something that got bought out, because it's basically stuck at this $18 here. So you gap up and just stay. So I'm assuming they got bought out by somebody. Anyway. Somebody's suing. Anyway. So there you go. OSTK, we're gonna have to see about these guys. I like obviously the idea, but we'll see what happens. There's a lot of transition happening at this company. I like it personally. I don't know if we even have a Zach's rank on it, but is it worth this much money right now? No, it's not. Lots of speculation in this stock. Why don't we just do this just for giggles? This is the last thing because I got to get out of here, guys. But I just have to. Let's just look. Let me forget about this. Come on. Let's go. Roll it up. Let's just. I'm not even gonna do. I'm not even gonna do the forward 12. We're just gonna look at price to sales here on overstock.com. OSTK. Let this load. That's a shocker, right? 0.98. Price to sales. And then if you look on the earnings side, they're not making any money, right? So you're selling all this stuff, but it's costing you a lot of money to sell it. And look at the projection here on when Overstock is going to make money. 2020. So that's a lot. That's a lot. If Win is found guilty, should you sell? If you're holding it now, like if Win is still, if you've already weathered a downturn here, you're pretty much committed now, right? I mean, you've already had the downside. I don't know that it's going to go worse. Don't know that it's going to get worse. So that's it. I can't get into Bitcoin today because I'll be here for 4 hours. But that's all I got for you guys here today. And then now we got some other breaking news happening here with an Amtrak thing and all sorts of stuff. Plus, Big Dog's got to get some lunch. When I get hungry, I get cranky. You don't want to see me when I'm cranky. So I want to thank you guys so much for your participation. Remember to hang out, see what's up in the chat room when you get a chance. I'll be back tomorrow. I believe we're talking about Amazon. We're going to do the same time. This is 11 o'clock show. We're going to listen to different music. Yesterday was Tiesto. Today was classic rock. I don't know what we're going to listen to tomorrow. Just go ahead and throw me out music suggestions for tomorrow because I could do that too. And there you go, folks. So thanks so much for hanging out with me here today on Live Trader, and I will see you all shortly. Have a good one.